Good day, everyone. Well, most of the talking heads in the crypto space continue to misinform. First, trying to pick the bottom in Bitcoin since January of this year, and secondly, by saying the Bitcoin metrics show we're at a major low since similar rose at market bottoms in January 2015 and December 2018. But 2022 is not 2015 nor 2018. Today, we have historically low interest rates. We've got soaring and persistently high inflation and record levels of debt, both induced by COVID, economically crippling ESG, and political uprisings between nations. So in consequence, supply side inflation, with which the Fed has no tools to combat, has been a large part of overall inflation. Therefore, it's likely the Fed will break this chart you see there. This is the BTC and SPX uptrend that was induced by all the money printing since 2008. And they plan to hike 50 basis points today and potentially another 50 or maybe two more 25s. And that'll bring the terminal rate to around 500 basis points. And the CME Fed futures is forecasting this. QE Light will become a standard as the Fed has to print money to service record levels of debt, and debt to GDP in the US stands at over 120%. And history over the centuries shows that 77% is the point of no return for nations. That's the event horizon, so to speak, using black hole terminology. And while Belgium and other countries in the EU, for instance, have been triple-digit percentage territory for a number of years, Ray Dalio of Bridgewater shows that the long-term debt cycle, which is several decades long, cannot sustain such levels. So we're at a tipping point, and Stan Druckenmiller thinks we could get stagflationary, go nowhere, or downtrending markets over the next decade. We saw that in the 1970s, but a black swan would force the Fed to print trillions once again. And then it would be off to the races as fiat sinks further while stocks, bonds, hard assets, and Bitcoin rise. Such a situation is more likely to rise now compared to the prior decades, and that's due to these macro extremes we're at, involving debt, interest rates, inflation, and the political landscape. And of course, everything is more connected today than ever. So one domino tips the others. But there's no guarantees that we're going to get a black swan. The idea is the black swans are supposed to be rare. But I would say that in the past, the odds of a black swan are minuscule. So it surprises everyone when they hit. But today, I would say they're only small, relatively small. Now, with all the financial blowups this year over in the crypto space, we had Celsius, FTX, and others, the primary value of crypto blockchain are its unalterable ledgers. So this enables the saying, don't trust but verify. These ledgers are the replacement and cure to fractional reserve banking, which have victimized people over the decades as they see their fiat degrade. And in 2008, it was banks investing customers' capital into collateralized debt obligations, which were then repackaged mortgages where the likelihood they would be paid back were slim to none. And in 2022, it was centralized exchanges gambling customer funds without consent, or using leverage, or placing value on tokens they had created, such as FTX's FTT token. Crypto blockchain makes this blind trust in third parties unnecessary, and that's thanks to blockchain's ability to provide open books in the form of on-chain data. This transparency will enable crypto to improve upon traditional finance's failures rather than copying them as it did in 2022 with crypto getting the blame. Over in markets, we see the risk on averages such as NASDAQ Composite and Russell 2000 remain materially weaker on a price basis than the less risky averages such as the Dow Jones Industrials. And lower lows and lower highs remain in force, even with the S&P 500. While the Dow Jones Industrials is making some sort of double top. Even with the CPI numbers coming in once again 0.2% below expectations, The CME Fed Funds futures definitely expects a 50 basis point hike today. And then basically we're looking at, depending on what Powell says today, he might try to be a little dovish, but there's really no, I don't know, there doesn't seem to be a real sound reason. Inflation is still historically very high, and it's very potential that it's going to stay stubbornly high because of the supply side issue. And Goldman Sachs has already forecast that. It's suggesting we're going to have a series of 25 basis point hikes well past the 500 basis point terminal rate. And I don't think we get there. I think something's going to break along the way. And that would be, the rise of another black swan that forces the Fed to pivot into halting, then lowering rates. And, well, if we don't get the black swan, we could get stuck in a stagflationary environment with stubbornly high rates while unemployment starts to soar sometime in the first half of next year. And that is if prior recessions are any guide. Gil, how are you seeing everything?
Yeah, I think, don't worry about fundamentals. Don't worry about massive sovereign debt. Don't worry about anything. Just it's all about whether the Fed is going to print or not. So it's kind of become pretty ludicrous in my view. And what are we at? We're at 3.5% right now. Is that right?
375 to 400.
So they're going
right
to go
now.
to 450, 425, 450 today. And they're talking about getting to 6, 7, maybe as high as 8. I think the other thing that people need to understand is that inflation, they say, is 7.1% on an annual basis, CPI. But the reality is that they calculate it much differently than they did back in the 70s and 80s, when if they calculated it the same way, it would be closer to 15, 18%. So is it gone? Is inflation gone? I don't think so. I mean, you go to the stores, prices are still up. It seems like you've ratcheted to higher levels. And you also still have this whole QE phenomenon, which I think creates inflation in and of itself, and that's going to keep the inflation ball rolling. But we'll see what happens today. I think the market could react in a very volatile fashion like it did yesterday. I mean, you saw that, right, Chris? The CPI comes out and they jack the Dow's. I'm not looking at the Dow futures up 750. I was actually long gold miners coming into the number. I just had a feeling. I could have been wrong, obviously, but I got lucky. And the setups were there, though. Things were in reasonable positions. So they all jacked. I sold into that. They brought them back in. And I flipped short early in the day as the market rolled over. And basically, that's pretty much what happened. If we just look at from the perspective of the Dow on the intraday chart, you can see the big gap up move. And really, the opening move was a peak, first 5 minutes. And from there, it was all downhill. It was probably the easiest day of shorting I've ever seen in my career. Primarily because just about everything I was kind of parroting that Cole Porter song, "Birds do it, bees do it." But like home builders did it. You see the big gap up. I'm just going to pick some random names. Caterpillar did do it.
There was
look at fertilizers. You see CF yesterday gapped up, but it was already in a doggy position. You can see some of the others doing the same thing. Probably the best way to do this is financials did it. Railroads did it. Let's go to telecoms. Arista Networks, it did it. So you had all these stocks, they gapped up, and then right at the open, everything reversed. One of my favorite names, if you're following me on Twitter, Oracle was a gap up after earnings, and they had it up trading at 86. Right at the open, you can see the open there, and then boom, they sent it south. Now you're trying to come up off the 20-day line. I don't really understand why they're rallying the market ahead of the Fed meeting. I just shorted into it, actually. I'm taking a position in the UVXY and the PSQ here, and probably blow it out, most of it out before the Fed comes out, because I think what they do here is they rally it early in the day, suck everybody in, and then they'll roll it back heading into the Fed meeting. At least that's my plan for now. So, but we can see how these are playing out on the 620 chart. So if we look at we'll just look at the Qs. Whoops. So you're getting that. You see the signal here. So it's happening about 290.50 on the Qs. They're coming in now. If you look at the UVXY, you have the signal here. So it turned at 695. I mean, we'll see if these actually work, but I'm in. They're pushing up a little bit. And my plan is to basically day trade them. And that's what you're looking at, because we have no idea what's going to happen after the Fed meeting. We could blow apart. We could jack to the upside, and we could jack one way or the other, blow apart or jack higher, and then turn around. So that's basically what you're left with. And I don't really, again, I don't think this is a trending market. I mean, the NASDAQ is not trending. Okay. There's no real trend here. You just say that we're in a big bear flag. The only thing that's really been trending strongly has been the Dow, but it's now slowed down as it approaches the mid-August peak here, and you've had some double top maneuvers. Yesterday was a clean double top. You could have shorted that using the S Dow or the dog, either one, and that would have worked. But of course, you could have shorted anything that way because everything reversed. I've never seen such a uniform reversal. If you just look at the Dow, you look at the NASDAQ, you look at the S&P, which is now hanging along the 200-day line, but you see the little double top there yesterday and the big reversal. And so, it's goofy. And I think it makes it difficult to trade outside of a swing trading or day trading approach. And that's basically all you have, unless we start to head a lot lower. And maybe we'll get a sense of that after the Fed meeting. But do I want to be sticking my neck out when the Fed comes out today? I don't really think so. If I have some profits in some of these things like the UVXY, I'm inclined to probably take it, and maybe I'll hold a small position, because if the market does blow up, you'll get a lot of leverage there. So, that's just what I'm thinking. So other than that, I don't really see a lot to do. And we can go through various areas of the market. Just start with financials, and you can see they all got whacked pretty good yesterday, and things don't really look that great here. I think probably the better area has been precious metals, and that's what we've liked. And I think so far we've been pretty right there. The PSLV, which is what we favored over pretty much everything else, just continues to go higher. So that's working. And of course, you had the undercut and rally down in here. You had the moving average undercut and rally here, followed by a gap up higher, held the 20-day on the pullback, just keeps trucking higher. So, what is that telling us? In the meantime, you got gold is running into the 200-day line. But again, you had an undercut and rally down here. And I think you actually undercut this low too. And you've headed higher ever since. So the metals are moving, and that's what we favored. And so, if you want to participate, or you wanted to participate in this rally off the October lows, well, that's all you needed, really. And you just sit there with them. And I think also they have the added feature of having a sort of safe haven aspect to them. So I think that makes them a little more attractive in an environment where there's a lot of goofy stuff going on, and you never know when a black swan is going to show up at your doorstep. So that's, basically what we have been advocating. And you can see the miners are pretty much all down. I got this is my list of big stock miners. For me, a big stock miner, it has a market cap of at least $2 billion. You can't base it on the price, because a lot of these, as you can see, have single-digit prices or low double-digit. But some of the better miners, AngloGold Ashanti, which I've talked about repeatedly over the past several weeks, is one of the most levered miners to the price of gold. And if you run through the valuations of these miners, and if you go through scenarios, if you get a gold price of 2,000 or higher, you're looking at a $30 price in some of these. You're looking at like something as mundane as Newmont Mining. You're looking at an $80 potential price if you have the price of gold up there. So if we do see that, and I think you're going to, simply because you're seeing these Eurasian countries getting together, the BRIC countries, all getting together to look for an alternative to the US dollar. So I definitely think you're going to see the end of the dollar's hegemony as the reserve currency of choice for the world. And I think a lot of people, what's happened recently as countries have held back in terms of tackling inflation, and the U.S. has been aggressive, the Fed has been aggressive, raising rates. A lot of these countries, like England, have run into problems because their currency has depreciated so much against the dollar. And if they could somehow remedy that by not relying so much on the dollar, I think they would do it. And so I think ultimately that's positive for gold. Once all the dust settles out of crypto, and I think the arrest of Bankman fraud is a positive for crypto, because if you look at Bitcoin, yesterday it posted a pocket pivot at the 10-day and the 20-day line. It's not showing up here because people are worried about who puts this one out again? What's the name of the company, Chris?
Grayscale.
Grayscale. Yeah,
Has
people are worried about Grayscale's solvency.
Yeah.
So
They
that's
have
why.
exposure.
If you look at Bitcoin, let me see if I can yank out a chart here. Here we go.
Grayscale has also not been transparent, less transparent as the market wants them to be. They're using some excuse for security reasons. They can't say certain things, but the market doesn't buy it.
No, but and if you look here, you can actually see if you look at just pure Bitcoin, forget about the exchanges, you had a pocket pivot here coming off the 10-day and the 20-day yesterday, and today you're pushing higher through the 50-day line, and you're on track for another pocket pivot. So I think it's seeing the light perhaps at the end of the tunnel. Maybe it rolls over again, but that is showing you that Bitcoin is responding to the washing out or clearing out of people like who run FTX, which is fraudulent and contaminates the space. So I think that's what's happening right now. How you play it outside of just going into Bitcoin is another question, because I really wouldn't be comfortable being long this Grayscale thing or any of the Grayscale things. Now, the interesting thing here is that Coinbase, you would think with one of their major competitors, FTX, being tossed out, that it would be bullish for Coinbase, but it wasn't yesterday. It pulled a big outside reversal on pretty heavy volume. And I think that, there may be some other issues here for the exchanges, and that would include Coinbase. I know that Silvergate, the CEO's running around assuring everybody that they're fine, but I think they've got some problems too. And the fact that they did not positively respond to Sam Bankman-Fried's arrests and instead have sold off tells you something, that there may be some cockroaches yet to come out in terms of counterparty risk with respect to the FTX bankruptcy. So this is going to be very interesting how it cleans out. But if the dollar loses for reserve currency status, and you see the Fed start to pivot and lower rates, then I think Bitcoin probably is your best candidate for crypto. It's the most legitimate one out there. So it could turn and run. I think gold and silver go nuts. And I think the miners, which are highly levered to movements in gold and silver, go nuts as well. Of course, some of them have already started to do that, and we can certainly see that in the charts of Anglo Gold Ashanti. I like that name, Agnico Eagle Mines, steady uptrend, higher highs today. There's a Sprott Physical Gold Trust. Newmont Mining is just basing. It's kind of the laggard, but still, if you did get a gold price of over 2,000, say 2,100, 2,200, the price of this on a valuation basis would have to go much higher. So I think this is an area definitely to have in your back pocket. It's already proven itself more recently. Goldfields, a massive move higher, and all it's doing now is messing around in a tight little flag here on the weekly chart. Very nice and tight. I don't know if you call that a high tight flag. I don't know. It's up there and it's pretty tight, but the high tight flag formation is basically mythical. There's nothing really to it. So, but we just base things on what we're seeing where the rubber meets the road. In this case, you're just bouncing along the 200-day line, and it may become viable in here along the 10 and the 20. If the Fed sparks a rally, or there's a perception that they're getting closer to the end. And Chris, your thought was that we could see something bust in terms of a black swan type of thing in as early as February, or the Fed starting to turn because things get pretty hairy on the economic front, like February. Is that what you're thinking?
Well, yeah, sometime early next year. There's just a lot of stuff that is more likely to break the higher interest rates go, and so they're doing another 50 basis points today. And maybe that's all they can do before something breaks. We might see another December 2018 where the markets just start to nosedive
Yeah.
day after day, and that forces the Fed's hand. But yeah, I think also that in terms of Powell's testimony today, the inflation, if you look at the components, food and rent are still
Very high.
noticeably above everything else. So you get oil going down, but food and rent are like the necessities, absolute necessities. So those are still way above what is in anywhere near the Fed's comfort zone. So I think Powell still has to take a fairly firm stance, although his language may try to calm the markets because we're bouncing here, and he probably wants to sustain some sort of bounce. So he may take some of the language or soften it. But that's really not a big deal to my mind. I mean, the overhang is still there. We still have major problems with inflation.
But Chris, do you think, given the inflation problem, do you think the Fed wants a market rally? I don't think this is what they want. I think they want to, but I mean, in reality, do you really have one here as far as the NASDAQ goes? It's really in the Dow, but do you think they want the market going higher? Do you think they want the perception being that they're going to come back to printing? And so Powell might be a little more hawkish today, and we'll just see, how that plays out. But I'm just thinking, do they really want the market to rally?
I don't think he wants to be more hawkish. It's the question of whether he stays hawkish or lightens up a little bit. And I mean, he's walking a narrow tightrope, and oftentimes when he gives these testimonies, the market likes what he says because he tries to calm the markets any way he can without going overboard. So I wouldn't be surprised if the markets rally on today's testimony. I think over the last every testimony he's given this year, I think the markets rallied pretty much every time except the time in June where he was taking a real negative stance. And I guess recently there was he had to take a hard line because at that point the CPI numbers were coming up ahead of above expectations. But now we've had two CPI reports in a row where there was 0.2% under estimates. So that gives him some breathing room. Maybe he can then use that as an excuse to be a little bit more soft in today's testimony.
Well, I think another thing to think about also is the PPI number came in hot on Friday, and that may be giving you some clues to where the CPI is headed in January, or actually in December, which will be reported in January. So a lot of dynamics here, a lot of cross currents, and that's what makes it very difficult. But again, I come back to my space of choice, which is the precious metals space. And, just going through these names, you see Pan American Silver, a pocket pivot yesterday, even though it did stall, but it's hanging in there. So it's holding tight. But a lot of these miners did a similar thing. They gapped up and then they reverse. But wheat and precious metals, Franco-Nevada, these are all, either in shallow uptrends. Some of the uptrends are more pronounced, like the better names like Anglo Gold, Ashanti, Goldfields. Those are my two favorite miners. I also like SSR Mining, which I'll get to in a second. Osisko Gold Royalties is also an interesting one. They own production streams, and they're in a pretty good position. Had a little undercut and rally. You can see this. That would have been on Monday, and then yesterday popped higher but reversed. But they're holding in here in a base, and they look okay. First Majestic, it doesn't know whether it's a long at the 200-day line or a short at the 200-day line. But overall, if we just forget about the 200-day line, you're sitting in a base here. And it seems like support lies along the lows of that base, which now coincides with the 50-day line. So that's another area to be looking at. Royal Gold holding along the 200-day line. And volume is drawing up today. So, maybe that's going to punch higher. Eldorado Gold hanging along the 10-day line. Mag Silver, which is a quality silver name, hanging along the 10 and the 20. SSR Mining is one I like. Another gold miner I like, a junior miner, and hanging in a nice little base. But it looks more like Newmont, really. The two big names, in my view, the two strongest names that I feel are pretty well levered to the price of gold are Anglo Gold, Ashanti, and Goldfields. And I've been telling you that for weeks now. So it's a space I'm deeply intimate with. In any case, so that's that. Other areas where else would you look? If I just look at my list of commodity names, well, you can see stuff like Agco is trending higher, but Albemarle, the lithium names, are screwed. And Alcoa was a nice short yesterday, but it's just hanging in a base here. Arch Resources, a coal name at the lows of a base. I don't know if it tries to get up and out of there. Bungie, not looking so hot, kind of a bear flag. Century Aluminum. Yeah, I think some of these are names, particularly the metals. If we do see a rally in the market, this might be where you want to be. But again, I like the precious metal space. I don't really see why I need to do anything more than focus on that. And every day I come in, focus on a handful of those names that I'll trade. You can see today we have a nice pop off the lows on AU, so it's up. Goldfield's up slightly, but AU is Anglo Gold Ashanti. If we look at this, they had it up, gapped it up at the open. It came in, turned on the 620 at around 1932, 33, and now you're punching higher to higher highs on the chart. So, looking pretty good. And this is actually the most levered gold miner to the price of gold. So keep that in your back pocket. But as far as I'm concerned, this is the only place I need to be. I don't really need to start thinking about every other group, and trying to make leaders out of laggards, because I think that's basically what you're doing. And then when you think you have a leading group, it blows apart, kind of like we've seen with the oil names. Maybe they're going to try and make a comeback, but I think ultimately I want to stick with precious metals. So let's cruise around, look at some of the semis there. Some of these have been rallying, but if we kind of blow things up, you get a better sense of where they are in the grand scheme of things. So the rallies could ultimately become shortable. We'll see how this plays out, but not an area I feel like I need to be in. Again, I like the gold and silver space, the precious metal space, and I like, I personally I like the move yesterday in Bitcoin. That's a move I want to buy. I don't have any opinions about it. Okay. I'm not here to tell you all about the wonderful technological niceties, but I just look at the freaking chart. I like that chart, and I can also put it together with this idea that I think if the dollar loses reserve currency status, well, alternatives are going to do very well. So, and I think if there's confidence again in things like Bitcoin, and hopefully some of this washout with FTX helps to build the runway for that, then great. I'm all over it. But we'll see. We'll see.
Crypto likes, obviously, it does have some correlation to the market because it wants a softer Fed. And so the CPI number came in soft. So stocks rallied, crypto rallied, and they want easier money. Ultimately, that's how these risk-on assets need easier money.
Chris, yesterday the market gapped up and then everything rolled over. Bitcoin moved higher, gapped up, and it just kept going. So, I mean, to me, that kind of said something. Now wait a minute. Are we actually arguing where I'm bullish and you're bearish?
No, I'm not bearish, but okay. What it shows is more resilient strength than stocks because they both gapped. They both went higher because they like a soft CPI. They like the idea that the Fed will be less aggressive, less hawkish. So they both rally on that basis. But the stock market had second thoughts that said, you know what, the Fed may not be able to be so kind. So it reversed course. Bitcoin, on the other hand, has the tailwind of the overall factor of basically fiat being degraded. I mean, it just has a long history of it. So I think that's got the wind in its sails. So yeah, I mean, actually, if you look at the market, if you look at the Bitcoin market, it's actually showed relative strength compared to the risk-on averages like the NASDAQ over the last couple months.
Yeah. So so there you go. So that's basically my approach right now. I'm watching the precious metals. I like the move in Bitcoin right now. I do. We'll see what happens after the Fed meeting, and that's pretty much it. So any questions to wrap it up? Come on now. I know some of you are awake. Nope, nothing really. Well, that's all I've got. You got anything else to add, Chris? We'll just see what the Fed does and take it from there, really.
Yep, that's about it.
All right. Well, thanks for showing up, everyone. We'll catch you next week, and we'll just see what shakes with all of this. So take care.
So long, everyone.